In this video, I'm going to recap the trades I gave you on Monday and then break down this big short trade I just took on GBPUSD. A free trading course which is 13 videos long. It teaches you 10 different topics on why you're not winning and how you can turn your results around. So when you finish this video, head over to the link in the description that says free course and sign up for that now. Hello everyone and welcome back to the channel. I hope you've had a profitable week. There's absolutely no reason that you shouldn't have had a profitable week if you followed the video that I gave you on Monday, breaking down some GBPUSD ideas. So what we're going to do is quickly recap those, and then we will move on to this big short trade that I took last night or yesterday in New York session and closed today for a very healthy profit. Now, first of all then, if we go back to the start of the week, we traded out of this demand. We pushed just below it, and I did say this was going to be a zone liquidation, okay? We saw this movement, and that's when I made the video. Here's where the analysis started. Here, I said we would be selling. Here's the sell opportunity that I gave you. And then after selling off from there, I said we would be buying from this zone. Here's the buy zone I gave you. Now, as you can see, had you sold from this zone, bought from this zone, you'd be looking at some healthy profits. The buy, I gave 2 take profits. This was the first take profit. Here's the first take profit that I gave you. This was the second one. And there's the overall buying idea that I gave you. The reason that I gave you this one is because I said we at least need to go and liquidate this high before we sell off. And as we've seen, we did go and liquidate the high perfectly, and then we sold off. So I was actually looking for, a continuation to the upside after this. I was actually anticipating a movement like this to continue this trend up. But as we saw, it didn't happen. Regardless of that, I gave you a perfect short trade, flawless short down, and then a flawless buy all the way to the first take profit. This was 100 pips. This was about 40. So 140 pips there for you. Essentially no drawdown on either of these positions, and I hope you all took advantage of that. So let's go and break down this position now. This was a short trade that I took yesterday in my prime time in New York session, which is between 12:30 and 2:30 UK time. So just at 2:30, we saw price wick up, tap in my trade, and then sell all the way off. Now, the idea behind this trade was basically using the things I gave you on Monday, this liquidation point. I was looking for a sell to buy. So going to the 15-minute real quick, the idea behind this was simply to sell the market down towards this buy zone. So this was actually a buy zone that I was looking to trade out of. We saw the liquidation, and what I wanted to see then was this imbalance filled to trigger a new buy. So I did actually have a buy order waiting on this level. My target was that final target that we talked about earlier in the week, and also just that was going to be this one up here to fill the final imbalance towards this supply zone. So my trade was a little something like this, and that was a buy limit. So this actually did lose, as you can see now. That was a -1 odd position. But on the way down to this trade, after the liquidation, a perfect setup came for a sell to buy. So the idea behind a sell to buy is if the market gives us solid confirmations to trade into a buy zone or into a sell zone, we can do that. We can buy or we can sell on a lower time frame basis to just fill the open space and then secure the next trade. Now this sell to buy actually turned into a hedge because I considered, what if the market gets weak? I'm already running healthy profits on this move. I'll just hold it. And that is how you can see I turned this trade into, a 9.74R was the time of closing. Where did the sell to buy come in? How did I formulate this setup? And how did I execute it? So we saw this liquidation. As we can see, that high that I said would be liquidated was liquidated. And after we did that, we had a dramatic sell-off, a very strong bearish impulse. Now, when I say liquidation, what do I mean? Well, I mean this is a lower high in the trend, right? So we have sellers selling anywhere within this range. Stop losses are going to be above that lower high. Standard retail education, stops over the high, okay? I use that too, obviously, but in a different light. But we generally know, after we form a lower high, if we have obviously resistance, which we can see a bunch of resistance around this area, or trend line, we can see a descending trend line here, your stop loss will go over the high. So there's going to be loads of stop losses just waiting there. And as well as that, we also are going to have buy stops. So what that means is we have traders waiting with buy stops set so that when the market pushes up, the idea is we'll push up, trigger in, and then move towards the next support point, which assumably would be at about the same place as my target. So we're going to have buy stop liquidity here. We're going to have sell stop loss liquidity as well for the sellers. And what that means is it's a high interest point for the market to come and push into before doing its thing, all right, before continuing in its given direction. So what we saw was the market do exactly that, pushed up, liquidate that position, and then the sell-off came in. And this is what actually formulated my trade for me. Because after this sell-off, what I'd seen was multiple structure points broken, okay? This here, minor structure. This here, the more major structure. And then over here as well, we even see this third low was broken as well. So this entire range that we formed here was taken out entirely by this impulse down. What does that show us? There is a lot of weakness coming from this area. There's a lot of selling pressure coming in from this point after the liquidity was taken. So what this did was push us down and open us into this price imbalance, which sat just above that demand zone that I wanted to buy from. So just going to quickly put that back on. So you know I was waiting for a buy there, and I did take a loss on that buy. But basically, the initial position was prepped to be something like this. That would have been around a 4R move to sell down, followed by the buy, which hopefully would have been a 8+ R, but turned out to be a loss. So when I was running this position at around this point on the night, posted this on my Instagram yesterday as well. This was where we were at, okay, when I went to sleep. So this was, midnight. Basically, at this time, I decided rather than keeping a take profit here and taking this as a sell to buy, I'll open this as a hedge. A hedge trade is basically where you trade both directions so that you don't really have any risk. If you're already running a short profitably, you can buy into the market at a given level. And if the buy wins, you'll be taken out of the short at break even. And if the sell wins, you'll lose the buy, but you'll make heavy profits on the sell. So if you hedge, you basically cut out all the risk on that position. It means you can, you'll chop 1R off, regardless which direction it goes, but you basically have open exposure both ways. So I can't lose, okay? So basically, I held this as a hedge. I decided to open this take profit up, totally open take profit, no set level, and I was just going to see how it went. Because the idea is, if this, does sell through, we can work out where the target's going to be later. If it does buy up, this position is now break even. There is no risk there. So if we do actually make the push to the upside, we can either look to cut this trade early, or we can just let it break even. Because by the time that this trade is break even, yes, we're missing out on this 4R, but we will be running, at this point, 5R the other way. Okay, so we are in a win-win position if we hedge. And that's why I decided to hedge. I woke up, the market was trading around my buy point. I got tagged in on the buy, took an instant loss on the buy as all of that dollar strength came in. And then when the market was trading down at 9.74R, which was this point here, I decided to take all the profits off this movement. Now, why did I take the profits? Did I have a predefined take profit level? No, I didn't. I simply took it because I was running 10R on a movement that came out of massive dollar strength. I figure, okay, 10R, when I was looking for, an 8R buy up, I've actually made more money on this movement than I would have trading this up. Obviously, there's the -1R on this one. So this turns out basically an equal trade to what I was looking for on the buy side. So I took the profits this morning, called it a week. That closes the week up for me. I also took some very nice trades earlier in the week as well as one more loss, which I took on Bitcoin. But overall, it's been a very, very good week for me, following, obviously, GBPUSD solely. And all of my trades, except for that BTC loss, have been on GBPUSD, tracking this thing back and forth. Hopefully, you've seen from this video how you can adapt to the markets and trade it both ways. If you are bullish, that doesn't mean you have to just buy. If there are clear sell setups with clear targets that could potentially turn into a hedge to remove all risk exposure from a trade, take them, okay? There's no reason not to take this sell. We had the liquidation. We had a massive bearish impulse. We took out multiple structure points. We opened in balance. We know price is going to come back to this point for our buys anyway. Why would we not sell into this? Okay, that's what you have to think. And you simply can. You can just take these trades, and it's going to add profits to your overall percentages at the end of the month, at the end of the week, at the end of the year. And I think one of the beauties of this kind of trading is you can just do what I did and open it as a hedge. There's no reason to take any risk on this position now because I know if the market sells off, I've won. If the market buys up, I've won. Okay, very good thing to do. So key pointers from this video, consider the implications of liquidity in your trading. As we've seen, the liquidation was really what kicked this off. Consider that you can sell to buy, you can buy to sell. You don't just have to marry one bias. If the market's going up, but there's open space and it's given a clear sell signal, sell down through the open space, no problem. Same way if you're selling and there is a clear way to buy up into the sell point, all right? And don't write off the idea of hedging and opening shorts and longs against each other because what that does is remove your risk exposure from the position. So I hope you all made good use of Monday's video. Some amazing, immaculate movements came out of the GBPUSD analysis. The short was perfect, the buy was perfect. Everything was really perfect. The take profit was perfect as well. So I hope you enjoyed that. There's going to be more of those. Hope you made some money from it. So thank you for watching. Thank you for listening. And I'll see you in the next video. If you want to learn my trading systems and get support from me every day in the community, head over to the link in the description and you can join my full trading academy. You get everything you need here. You'll learn my full trading systems, you'll get access to the community, you get access to the members area where I drop weekly analysis videos, backtesting videos, all of the above, and also team monthly meetups where we talk progress, go through charts, and I also do some giveaways as well. So everything you need is in here. I have students from all around the world, come from many different courses, and all found their place here. So if that sounds good to you, head over to that second link in the description and you can join that now.